Nikola was supposed to be the future of transportation, a clean energy revolution on wheels, a company that promised to kill diesel, disrupt Tesla, and reinvent how the world moved freight. At its peak, Nikola was worth more than Ford, more than Fiat Chrysler, more than companies that had been building real vehicles for over a century. And yet, behind the hype, behind the glossy renderings and explosive stock charts, there was a brutal truth hiding in plain sight. The trucks did not work. In fact, many of them did not even exist. The story of Nikola begins with Trevor Milton, a charismatic, self-made entrepreneur who understood one thing better than almost anyone else in Silicon Valley: perception. Milton did not come from an elite engineering background. He did not build Nikola by inventing breakthrough technology. Instead, he built it by telling a story people desperately wanted to believe. In the early 2010s, clean energy was becoming the new gold rush. Tesla had proven that electric vehicles could be sexy, expensive, and wildly profitable on paper. Investors were hungry for the next Tesla. Governments were pledging billions toward green infrastructure, and Wall Street was willing to suspend disbelief if the vision sounded big enough. Milton gave them exactly that. Nikola was presented as a hydrogen-powered trucking company that would revolutionize long-haul freight. Unlike battery-powered trucks, Nikola claimed hydrogen fuel cells would allow trucks to refuel quickly, travel longer distances, and outperform diesel in every meaningful way. It was the perfect pitch: cleaner than diesel, faster than batteries, bigger than Tesla. The problem was that hydrogen infrastructure barely existed. Fuel cells were expensive, inefficient, and notoriously difficult to scale. And Nikola had no proven technology to solve any of these problems. But that did not stop the story. Nikola released sleek concept images of futuristic trucks with names like Nikola 1 and Nikola 2. The designs looked real, the presentations were confident, and Trevor Milton spoke with absolute certainty about technology that had not been built. Investors did not ask hard questions. They saw what they wanted to see. In 2020, Nikola unveiled the Nikola 1 in what appeared to be a triumphant debut. The truck was rolled onto a stage, cameras flashed, headlines exploded. A hydrogen-powered semi-truck had arrived. What the public did not know was that the truck could not drive. The Nikola 1 had no functional drivetrain, no working fuel cell system, no real propulsion. The interior electronics were largely decorative. Even basic features were missing. The truck was in essence a shell. Internally, employees knew this. Engineers raised concerns. Some quit. Others were ignored. The priority was not building a truck, it was maintaining the illusion. Nikola's biggest breakthrough did not come from technology, it came from finance. In 2020, Nikola went public through a SPAC merger, a faster and less scrutinized alternative to a traditional IPO. The timing could not have been better. Retail investors were flooding the market, electric vehicle stocks were exploding, and hype was more valuable than revenue. Nikola's valuation skyrocketed almost overnight. At one point, the company was valued at over $30 billion, despite having no revenue and no working product. Partnership announcements followed. General Motors agreed to take a stake in Nikola, lending instant credibility. Press releases described cutting-edge battery technology, revolutionary hydrogen stations, and trucks that would soon dominate highways. There was just one problem. Much of it was not true. The cracks began to show when a promotional video was released showing a Nikola truck driving down a desert road. The footage was presented as proof that the truck was fully functional. In reality, the truck was not driving under its own power. It was rolling downhill. The engine was not on. The propulsion system was not working. Gravity was doing all the work. When investigators later uncovered this detail, it became impossible to ignore what Nikola truly was: a company built on exaggeration, half-truths, and outright deception. In September 2020, a detailed investigative report accused Nikola and Trevor Milton of fraud. The report alleged that Nikola had misled investors about nearly every aspect of its technology. Batteries that were claimed to be proprietary were actually purchased from third parties. Hydrogen production claims were wildly unrealistic. Even basic statements about engineering progress were false. Nikola denied everything. Trevor Milton called the accusations lies. He blamed short sellers. He promised transparency, but the damage was already done. Investors began to flee. Partnerships unraveled. General Motors dramatically scaled back its deal. Regulators stepped in, and within weeks, Trevor Milton resigned as executive chairman. The illusion was collapsing. In 2021, federal prosecutors charged Milton with securities fraud and wire fraud. The government alleged that he knowingly made false statements to inflate Nikola's stock price and enrich himself. The trial revealed what many suspected all along. Nikola's technology was years away from viability, if it existed at all. Internal communications showed executives scrambling to meet public claims they could not support. Engineers testified about pressure to misrepresent progress. The vision had outrun reality, and the gap was filled with deception. Milton was ultimately convicted. Nikola, meanwhile, struggled to survive. The company attempted to pivot, focusing on battery electric trucks instead of hydrogen. It delivered a limited number of vehicles. Some caught fire, others were recalled. Losses mounted. Confidence never returned. What made the Nikola story especially disturbing was not just the fraud itself, but how easily it worked. The company did not fool investors with complex financial tricks. It fooled them with confidence, buzzwords, and cinematic storytelling. The trucks looked real enough, the future sounded inevitable, and no one wanted to miss out. Nikola became a symbol of a broader problem in modern markets, a world where vision is rewarded more than execution, where promises trade at higher prices than products, and where belief can be monetized long before reality arrives. In the end, Nikola did not fail because hydrogen was impossible or electric trucks were doomed. It failed because the company tried to skip the hardest part, building something real. The fake truck did not just fool investors, it exposed how fragile trust becomes when hype replaces substance. And by the time gravity stopped pulling the truck downhill, the entire illusion had already rolled apart.